Okay, guys, let's just have these short videos where I will be just giving you some tips. But if you have been following my channel for a long time and you have been following some of the things that I've been saying, that I've been teaching about, you get to have an idea that the foundation of everything is simply price imbalance that has been discussed so far in this channel. So if you look here, you get to see that we have this nice move going down. Okay, price gets to move quickly down, and it created some price imbalance. And then price came back, trying to fill this price imbalance, but somehow price failed, and eventually it continued to go down. Okay. So basically, that's the same thing that took place here. You get to see price going down like this, and if you look at this area here, you can get to see that this is price imbalance. And price came back, fill in that price imbalance, and continue to go down. Okay. And also, if you look at here, this is price imbalance. Price came back, fill it in, and continue to go down. So if you just look what has been happening here, it's simply price imbalance. Here also price imbalance. Price fill in the price imbalance here and continue to go down. There is also price imbalance here. Price fill it in half, go up, came, fill it in fully, and leave. Okay. So also if you look here, we have price imbalance. So price fill it half, and it came back and fill it in completely here. Okay, so looking at let's go back here. Looking at what we have here, you can see that this is going to be our reference point, and I'm going to explain why do we say this is going to be a reference point. So if you look here, you get to see that this is our reference point that our price will actually use to change direction. Okay, so price came back, finish up filling the price imbalance, and we get to see price going down. And when price is going down, if you look here, we have price imbalance. Okay, and price came back, previous low that has been violated, it's going to be what we are looking for to see price coming and dropping it. So we get to see it spike this level of our previous low that was violated and continue to go down. And if you also look here, you get to see that we have our previous high that was being violated. So price came back and touch our previous high that was violated and then get to change direction. So when we get to look at our previous highs and our previous lows, we need to look at it with our price imbalance. Don't just look for previous highs and previous lows and you say you expect market to buy when it gets here, you expect market to sell when it gets here. That's not how it works. You need to look at it in relation with your price imbalance. So if you see here price imbalance, there is a lot of price imbalance. So price needs to come back and balance everything. So that's the same thing that you see here. If you look here, you get to see the same thing here. Okay. Look here, this is a law that has been violated. Oh my god, this thing does okay. Let me just put it here at least. So if you just look at here, you get to see that price created some impulse swing going down. So it come back, pull in, and then go down. Just purge this previous low that was being violated, and then it changed direction. Same thing that is happening here. The previous low was being violated. Price went down, it came back to it, filling in this price imbalance. And we get to see price going down and violating this low that we have here. And price came back at the later stage. What did it do? It dropped after that, okay? So, and if you look here, let me just put this here. you look here, same thing that happened here. So you get to see that price spiked this level and it went down. You see this spike? It's a result of this previous low that has been violated. Okay. So that's the idea behind your take profits, your entry, and your everything. But before we get to anything, let me just show you something on our whiteboard so that you get to understand the concept behind everything. So we're gonna be looking at our two scenarios. Okay, so this is gonna be our first scenario. Let's take you have price. Say you have price moving like this. Let's say this is price moving like this. And then we have another scenario where we have price doing something like this. Price came back. The price went down. Okay, this is what we have. So we're going to be looking for to see price getting to this level. And when price get to this level, we're going to be selling. Same here. When price get to this level, we're going to be selling. Okay. So what's the difference between these two concepts that you see here? Okay. The difference, if you look here, you get to see that we have stops that are being taken up. Okay. We have buy side liquidity that is being collected here. And if you look here, you get to see that we have a failure swing. Okay. So price failed to collect this buy side liquidity that is resting here. So as a result, price came back and tried to balance these price imbalance that you see here. So it came back, balance it, and it dropped. Same thing here, came back, balanced this price imbalance, and then it continued in whatever direction where it was going. So we get to say if price take out these stops, this concept, we call it a breaker here. And then if price made a failure swing, we call it mitigation block. Okay. So let's go back now. I know it's gonna make sense if I show you chart again. Let me just show you the chart again so that you get to see. So if you are looking at this scenario that took place here, if you can go on a smaller time frame, you will get to see that this thing that you see here, it's actually a high that took place. So it's something like this, and then it's something like this. Took out all this buy side liquidity that is resting here, and we get to see price changing direction. So what we were looking for here is simply our mitigation block. Okay, so I think it's going to be clear if you look at Nasdaq. Okay, let's just look at Nasdaq. You see Nasdaq here, what did price do? It left our high here and then went down. It came back, attempted to take out this high, but price failed and it continued down. So when it comes next time, we are expecting price to respect this area as our mitigation block. Okay, so that's the concept of it. There is nothing difficult. There is nothing difficult. You just need to focus and you just need to focus and put your mind into it. There is nothing difficult. So without any waste of time, I'm just gonna call this a day. So just go back to your chart, back test everything. And for those of you who are looking for signals, I've made signals for free only if you're gonna be using a recommended broker. But if you want to use your own broker, then you can pay $50 per month for signals. Okay. So basically, how our signal works, it's simple. We just add you on a Telegram group, and then we get to be telling you to buy and to sell. We also send our analysis, as you can see, like this. We send some videos where we get to discuss some pairs and stuff like that, and then tell you where to put your stop loss and take profit, stuff like that. You know how signals work, guys. So if you want to be part of our signals, then just come to us, and then we get to discuss and we get you started. Okay. So without any waste of time, guys, continue to make money. Shalom.